All right, guys. So today we're going to be talking about some advanced key levels, right? So advanced key levels is a very brief topic and something that you really enjoy. All right. Before that, let me just quickly go to GBP USD. I want to show you guys a trade idea I caught yesterday. Very clean trade actually. It was on the daily chart. Right. This is another broker. I don't know. This particular broker is not looking nice. Let's use 8 cap preferably. All right. So in this market, you can see that I was actually bearish here. You can check my channel. I was bearish here. So price came, I hit my bearish order block. Right. So you can see this candle around liquidity, and then we broke to the downside. So we had this bearish order block there. So that was my point of interest for this sell. So I wanted a 15 minutes time frame after the market hit there. So I wanted a 15 minutes time frame straight up. So 15 minutes time frame, you can see how price hits that order block, right? And then for me, I actually entered at this imbalance here. So as price swept this other block and broke down, I saw this imbalance as my entry. So I took my sell at this point and then was targeting this low. But it kind of tapped me a bit and then rallied higher. But if you are waiting for a market structure shift, because some of you like to wait for market structure shift. So the market structure shift happened there when the market took out this swing low, right? So market took out swing low. That was the market structure shift. So if you saw that as your entry, then maybe you're targeting this as your order block, right? Because our price actually came back there, gave you a very nice trade to take out this. So markets engineer liquidity here. So we had engineer liquidity at that point. The markets came, tapped in their paper, and then what? It hits what our engineered liquidity, which was what down here, right? Can you see how this was nicely hit? So that was the power of the bearish order block, right? Markets tapped our bearish order block, gave the break of structure. All right, this is top down analysis now. Very easy. Market hit your bearish order block, which is this level or this purple level, right? Markets came, gave that break of structure, and then tapped in for you and then dropped. So for me, I entered when the market gave this imbalance. So I entered before this break. Right? I entered there and price broke immediately below this imbalance. I just took it immediately. I told you guys that when price runs liquidity, price doesn't need to break structure for you to enter it. But to be conservative, you can wait for a BOS. But me, I didn't wait for a BOS. I just entered at the other block. Let's say price broke, I saw this impulsive 2 down candles. I know, okay, this is another block. And market has done what? Swept liquidity into what? A bearish order block, right? So I just simply took my sell there and then what? I took price down. I covered there. So if I was waiting, I would have caught another one here and then covered down there. This little equal lows. So this was a very beautiful trade. So I think that waiting for the break would have been more conservative because now you have what? A very clear defined target, which is what this little equal lows here. So these have been very clear targets. And if you saw this, it would have been like, I think it was 1 is to 2 point something. Let me see what the error was. If you took your sell at that point and your stop was above this high, so this would be like 1 is to 2.4, yeah, 1 is to 2.3 thereabouts, 1 is to 2.3 something. Very nice trade, very clean, just from there. Very easy one, no too much ambiguity, right? So that is basically what happened on GBP USD yesterday, right? So let's talk about advanced key levels, right? So advanced key levels, when we talk about advanced key levels, we have 3 of them, right? We have the A-shaped key level, the V-shaped key level, and the open close key level. All right. So we have the A-shaped, the V-shaped, and the open close key level. These are advanced key levels, and these key levels they are plotted with line charts, right? Although you can use your eyes to see them on candle chart, but they are actually plotted with the idea of line charts, right? So now, an A-shaped key level is a level that looks like an A, like it looks like an A. So most times you will see markets make an inducement before coming there. So now the A-shaped key level is that open close level. You use your line chart to locate this point. Locate this A shape there. Right, that is your key level. Locate that A shape with your line chart. You're not considering the body of the candle, you're considering what the open or close prices. So that becomes your A-shaped key level. All right. So it works as an inducement most times. You want to set an inducement before that A-shaped key level, right? So, and most times we see it form with an engulfing candle. That means most times you see an engulfing candle form like A-shaped key level. So most times you want to see what an engulfing candle. So this engulfing candle, the close price of it is what forms what your A-shaped key level. An engulfing candle forms your A-shaped key level, right? That is where you want to take yourself from. So for a V-shaped key level, it looks like a V, like we're to say the market is creates a V, right? So we have an inducement and then price comes to tap into our V shape. So it looks like a V. So you simply extend it in time and that becomes your key level, right? You can wait for the market to tap in there, then you can look for your buys. Either you wait for confirmations or you buy it directly. So it works as an inducement as well, right? It works as an inducement, right? It works as an inducement. So this is basically how we pick our A-shape and V-shape key level. Right? Key level works with close prices. So you cannot simply, like now, let's go to US 30 now. So I want to mark my A-shape key level here now. All right, let me just quickly look for a 30-minute chart. I want a chart that is kind of bigger. All right, let's quickly look for a 30-minute chart. And then if I was to mark my key level now. So how would I mark it? It's very simple, right? If I was to mark my key level now, look at this level. Although this is not play out, right? It didn't, but look at it here. So you can, it's simply what, say it sits here. You mark what? This is a V-shaped key level because look at the V. Can you see the mark that open close price? You can just simply go to what? A candle, a line chart, and you can see it very accurately. You can simply mark it very accurately with your line chart. That is your V-shaped key level, right? I'm not showing you guys an example, right? This is not player because of there is no inducement, right? And the market was bearish. So you can see how this is formed, right? This is what we call a V-shaped key level, right? So it forms an engulfing candle, and then you see price make an inducement just close to it. So that inducement is what makes high probability. There was no inducement here. Why did not play? So do you get a gist? Engulfing candle, and then what you see was you mark the close prices. That's what makes your a V-shaped key level, right? Now for open close key level, it forms with what two candles. So you see two candles side by side. All right, you see two candles side by side with the V shape with the line in between. So the close prices are usually very equal. Like open close key levels have two candles side by side, and then you see what you see the candles very close, like very close, right? Now, if I was to mark out an example of that, I will mark this. You can see this. Watch this. So you can see this level here. Pay attention. So we have this level right here. Can you see it? Capital price came perfectly. Can you see the inducement there? This was a very, very good buy stop. You can look at the inducement just there. Capital price came clearly and tab out open close key level. So it's actually bullish or bearish. This is a bearish example. And then a bullish one, obviously when the market is, gives two candles to the upside, and then you see what very close, they're very close, like the bodies are very close. So you simply mark the middle of it. That's your open, that's your advanced key level, right? Very, very simple. Very simple. So you simply what mark that midpoint, and then of course you want to see some kind of inducement before it to make it much high probability. You can see how inducement formed there just before it tapped into that key level. So if you were to take this buy, it was a very, very easy one here, like very easy buy here. So just simply you have just bought that open close key level here, just bought there, right? And then stop loss will obviously maybe below this candle. You have another open close level here. So maybe just to be conservative, you put your stop loss just all the way down here, just below that open close level there, just to be conservative. Just maybe stop loss below that point there, be conservative, and then of course you're targeting this high here. This would be 1:2.4, right? Let's see here we have much 1:1.9. So this was 1:2.9 from targeting this high here, right? This particular high. You can see how this was very nice one, very nice trade, right? Very, very nice. So if I put your solar just below this point, this was the open close key level. Why was it high probability? Because it was this inducement. You can see this low here, you can see this inducement here that just formed before what that open close key level. That is basically what makes it high probability, right? So that's how you use open close key level. It's really plotted with what and a kind of a kind of inducement, right? And of course, you have to consider the trend on the market. Is the market bullish or bearish? You have to consider that. And then let's talk about one last one, which is what a Quasimodo reversal level or the QMR level. So QMR level is also similar to this. All right, this is a QMR level now. It looks like this. The market creates this, and then so it's actually a V-shaped key level as well. So the Quasimodo level is here, right? Now we have two key levels. We have this Quasimodo level here, and we also have what this key level here, right? Now, in this kind of scenarios, how do you play it? Because now you're having what a Quasimodo level here, you're also having what a V-shaped key level here. So how do you now plot this? You plot this by looking at the inducements. Is the inducement close to this? If the inducement is close to this one, then this is what you will play. But if the inducement is closer to this higher one, then you play the higher one. Do you understand that? If the inducement is close to the Quasimodo, you play the Quasimodo. If the inducement is close towards this upper one there, then you play the upper one there. So you play this as your key level, right? So you just simply do take yourself from this one, because you want to see inducement taken out. So if the inducement is close to this Quasimodo, you cannot take your sell at the Quasimodo, right? You take your sell there, and then your stop loss should be above this higher, right? To be conservative, because price can still shoot for the higher one. So to be conservative, to avoid issues where the market will take you out and then play off this one. The market can choose to just take you out and then play off this one and then drop, and then you take a loss. So be conservative to avoid losses. You simply put your stop loss above this one in case price chooses to go for higher. But if the inducement is above at this point here, this now becomes not relevant to you anymore. You simply take yourself at this point, then put your stop loss maybe few pips above that high, right? So maybe add some pips because of where the level is. Right? Put the stop loss some pips above the high. That's for quasi-middle levels, QMR levels, right? Why for the bullish example here, it's just the reverse, right? Just the reverse. For a bullish example here, it's simple. Market is trending down. So now you have so where's the quasi-middle level here? Obviously, this V-shaped level. Remember, it's V-shaped too. Look like a V too. Can you see the V shape there? So now you play the one that is closer to inducement. So market can come back to this, and then look for your buy opportunities at this Quasimodo level there, right? And of course, your stop loss has to be below here to be conservative, right? Very conservative too, right? So very conservative. My stop loss has to be all the way down here to be conservative. That is all about Quasimodo reversal levels. Very easy. Right, I want to see quickly if I can find one example of a Quasimodo reversal level, a one that actually played out, because let us see if I can find one that actually played out, right? So we can have a very better understanding of what I'm teaching. All right, I've seen it. So now watch very carefully here. Watch carefully here. Watch something carefully here. So this market was bullish. We had a kind of bullish range, right? What do we have here? We saw a Quasimodo level here. Can you see this close price there? So let's just use line chart now to understand this. You can understand better. So off to the line chart now. Can you see the Quasimodo level here? Right. Remember, Quasimodo looks like this. Remember I told you guys that it looks like a V, right? And then price usually comes back. No. Remember I taught you guys just now. I remember. Does it look like that? Can you see it? It moves lower, and then so can you see the Quasimodo level there? So you can simply mark a Quasimodo level here. That's a Quasimodo level, right? And then cannot come back to what the line charts. So the candlestick chart. So here's our inducements now. So you can see our inducements, calculate this is your inducement, this is your inducement level. Can you see how price hits your Quasimodo level? Very easy. You hit your Quasimodo level very beautifully, and then your stop loss should have been below maybe this low here, right? This low just to be conservative. Right? Can you see how the market did what? And then you have targeting this high. So if you bought there, targeting this high, this would have been 1 is to 3.2 5 hours. So targeting this high to take profits. This would have been a very nice one there. Just right there. Take a TP there. Right. Easy one. So you can see how Quasimodo levels are entry, right? And then stop loss below this low. Very easy one. You can see how precise it was. Just sniper entry. Sniper entry. Sniper. And believe me, I did not, go through this chart before now. This is the first time I'm even seeing this. Right. This is how this thing works. Right. So this is very easy setups, right? Either you play the Quasimodo level, you play the V shape, or you play the A shape key level, right? It's very easy, very easy, folks. It's very easy if you can actually pay time, use your time to backtest and study this. All right, so this is basically all the example I'm showing you guys for now. I can't really find another example as of this moment. I don't want this call to be so long, but I don't want this video to be so long. All right, so what I'll advise you guys is to spend your time backtesting this information. By backtest it works on the higher time frame, it works on the lower time frame, right? So it's just like a kind of extra confluence, right? Of course, I trade without this, right? The models I've taught you guys before, other block, fair value gap, you can trade without this. Of course, you can trade without advanced key levels. You can trade without it. But this gives you some kind of precision. You have more precise entries, more exact trades, right? Of course, you can trade without any of this. You can. I've been trading without this. You can use normal fair value gap as an entry. You can use other block as an entry. You can just trade without this. But of course, this just gives you more precision, right? It gives you more accuracy when it comes to entries, and reduces your losses. So you can kind of filter out your trades, take more accurate trades, and then you have more probability in your favor, right? That is basically what this help you to do. It helps to kind of improve your win rate. It's not like it's the holy grail. It's a lot of improves your win rate, increases your accuracy, and reduces your stop loss. Right, so you can be more accurate with your analysis. Right, so of course you can do without this. You can do without this, but it's just for you guys in case you want to add this to your trading plan. Just add it up. It will make a lot of sense for you. Right, of course you have to do what back test this back test. Don't go and trade it live because people always meet me and ask me, do you give signals? I tell them I don't give signals. I only teach you to go and study and then practice on your own. I don't tell anyone take a trade. I don't do that. I will never tell you take a trade now, enter here. I don't ever do that. Even if people have met me to pay me for that, I said no. I'm not interested in creating traders that cannot depend on themselves. The goal of this teaching is to help you to depend on yourself, to analyze yourself, take your trades yourself, and profitable yourself without anyone watching you or anyone calling trades for you. All right. So that's basically so back test before do anything. Don't trade live. Just back test it, study it, back test and study this, study it before you can actually adopt it, right? So and yeah. So of course, if you want to join our paid group, I think this GU trade, which I called earlier, this GPUSD trade I called earlier, I actually gave the indication to my paid students. I actually told them get ready to sell. Now, although I don't give anyone entries, but I actually told them to get ready for the trade, this GU trade now. I actually told them to enter the trade when it was almost ripe. I told them that GU is getting ready for a sell. Right, that's what I told them. I didn't tell them to enter any trade. I didn't tell them to enter or buy or sell. I just told them the market is getting ready for a sell. Check if you can see an entry. And some of them, I think some of them called a trade, right? Few of them. So that's basically it. I don't give anyone trade signals. I only give you what um um analysis. I'm expecting this to happen. Right. So I'm not telling you enter or buy or sell, right? So I basically so if you want to join our pay group, it's still on a 20% discount. Use the discount code June for a 20% discount, right? 20% off. Just use the link in the description to join us. And this offer is ending on the last day of this month, on the 30th of June. It ends on 30th of June. Right. This offer ends on 30th of June. If you want to join us at 20% discount, just use the link in the description to join us and you can be part of our pay group, right? So have a wonderful day. See you tomorrow, which is the second to the last day, or let's say the penultimate stage, the day before the final day. So have a wonderful and lovely day. Cheers and God bless.